Everybody, happy Thursday. Hope you had a good Wednesday and you enjoyed yesterday's episode with Ganja. So, I want to come back to some of the comments, and that is what it is that you can control. You really can control your downside. That's the key here, right? So you're dealing with probabilistic outcomes where you have your entries and your exits, and your position sizing, so that sometimes you're going to win, sometimes you're going to lose. But at the end of the day, you have to take the thick with the thin. If you have positive expected value, you can figure out what you make on average per trade, even though more frequently than winning, you lose. That should give you some type of solace in knowing what to expect going forward, because models don't typically turn on a dime, for example. Now, it's interesting when you look at the personality types of people who manage risk in the markets, from the ultra short term stuff, the intraday, the hold it for a couple of ticks, less than 5 minutes. I guess you could go to high frequency trading, but that's more computer programming than trading, right? To position traders who are, inching their way into positions, or they buy it and they try to hold it for several weeks or maybe even months, right? They want to let the market do the work and keep the power of the market working for them, putting the wind in the sails. And so what you can kind of do is start to categorize people by their willingness to hang on to risk, especially when you think about holding on to risk overnight or over the weekend. You see? So one of the things that I learned to do when stocks were trading in eighths, which was a long time ago, was read the tape. And so that was very beneficial to kind of see how things were performing, where size was going through on the bid ask, but then also conjugate it with what day of the week, what time of the day, right? Because if you had things that were, we have 8 or 9 stocks that are driving the NASDAQ right now, and you can kind of see when those things sell off, how do they behave towards the end of the day? How do they open the next day? You can study that. Now, if you position size it right, and you're willing, and you willing to deal with the uncertainty, you can increase your holding period, right? Because for all the ups and downs, if you look back a month ago and see where the security was and where it is now, you could see everything that you didn't capture, which is opportunity cost. That's what it costs you for being unwilling to take the risk home overnight or over the weekend. You see? And I'm not pointing any fingers. I'm just helping you try to understand who you are and how you behave, or why do you think it's okay to cut a winning trade off at the end of the day or on a Friday, for example, when that information can actually be very, very valuable, right? In terms of where's the market, right? Because what I learned from my mentors, especially, Michael Marcus, is what do you think the crowd's thinking? What do you think the crowd's feeling? Now, I know there's a group of short-term people out there who like to fade bullish moves. That's not who I am. I always kind of was much more humble and kind of said, like, I'm not going to outsmart the market. If the market's making new highs, I might look for a reversal to take profits, but I'm not going to try to guess tops, right? I'm not going to try to say, oh, these other people are stupid, and therefore I'm going to go against the grain. I mean, that to me is pure ego. If you watch and look at, volume tells you a lot too, because institutions leave footprints. So I've talked to Brian Shannon about that, and you can go back and look at that video we did on his book, which is this one, The Anchored VWAP. I'm not plugging it. I'm just saying he's a good friend of mine. This is a good book. I think this also is kind of misunderstood, right? But so are Keltner channels, and basically any indicator, they're kind of worthless. But I wanted you to kind of investigate, how do you feel about uncertainty? Because you have a couple of types of uncertainty. You have the uncertainty of when you put on the trade. You have uncertainty of managing the trade, right? That's the second. First, you put the trade on, so you have the pre-market stuff that you're doing, which could be the night before, like me, and figure out how willing are you to deal with that uncertainty in order to seek the reward that you want. Because when you talk about risk, what we're really talking about is the financial risk. But again, there's 2 parts to every trade. So we're talking about the financial risk, but then also what is your willingness to deal with the uncertainty of the outcome. That's also on the emotional payout. And so I've just learned to embrace that risk, because like anything, the more I'm willing to feel all of my feelings, the likelihood that I feel the ones that I want becomes much more probable, because I learned the hard way that the feelings that I wanted to feel oftentimes were on the other side of feelings that were very uncomfortable for me early on in my career. And that came from, it didn't matter necessarily that I didn't know what I was doing, because in the short run, so many things were random. So you could make and lose money and think that you're good, bad, stupid, or what have you, but that none of those situations were really true. I was panning for gold, trying to find where the opportunity was and where could I exhibit skill that only came from the experience of putting those trades on. You can't get any trading instincts or intuition from a book or from a chat room or a Discord or whatever they're called anymore. I don't know. The young people have the most ridiculous things going on these days. But I will say the marketers are clever, because if you have a continuity product, which is what marketers call behind the scenes their membership programs, their continuity programs, it creates an annuity income for them. So regardless of how they trade, they still have you paying every month, which, may or may not benefit you. Some people just like the feeling of belonging to something. Some people like the feeling of being moderators in these chat groups, even though their trading is circling the toilet. But that's, everyone goes through their own learning experience. I read books, which was interesting, but I can't say that they helped me trade. What they did do was get me thinking about strategies that I could go deploy and put the risk on. And we didn't have paper trading then, so I had to do it with real money. And so that was the moral of my story, was to just go out and do it. So I realize the world is very different now than it was when I started, but at the same time, I feel like I have to have integrity and tell you my story. I don't know what it would be like if there was a Discord back in the late 80s, early 90s, if I would have done it or not, because I don't even know how to compare it to anything that existed. There were conference calls, maybe, party lines. On the dial phone, there was like a party line or a conference call perhaps, but for the most part, that didn't exist. So I was exempt from needing to know all that, which again gave me limited paths. I could either think about trading or I could trade. And so coming back to the moral of the story here, the thing that you can control is your downside. But what I have found is the people who made the most money were the people who were most comfortable with the uncertainty. And they've trusted that the forces of supply and demand, especially in the commodity markets, were in control, and that just like birds fly south, trends persist. Birds fly south for the winter. When you live in the Northeast, I don't know what day they're going, but I know they're going. And so I think it's a fallacy to think that the day traders make the most money. You can investigate that for yourself if you're open-minded and you look and see. But again, you have to find something that works for you. In my experience over 35 years, the people that that made and make the most money are the people who have risk. You can't get paid if you don't have risk. And having risk means you have to be comfortable with the uncertainty of the outcome. The outcomes are probabilistic, right? So no one could take away success, make a couple $1 million day trading, swing trading, that's for sure. But if that's a lot of money to you, that's great. Maybe once you get there, you'll kind of come to understand that there are easier ways to make a lot of money as well. And a lot of it is going to come down to how do you process your feelings around the uncertainty that trading involves. So that's all I have for you today. Please like and subscribe. Appreciate you all being here, and I will be back. Let's see when I'm back. I'll be back again tomorrow. So thanks so much, folks. I'll see you tomorrow. Okay, everybody, thanks for being here. Please take a minute, like and subscribe to the show. You could also leave a comment. I don't have all the answers, so it's good to get some feedback. Also, if you would like to support the show, check out the links below. You can get the free audiobook of The Inner Voice of Trading, and also information about the course that I teach with Victor Sperandio. Thanks for being here, folks. I'll see you tomorrow.